Hello and welcome. Today's day comes in that of Thursday, the 4th day of July 2019. My name is Derek. All bets, trades of the like, within each his own risk and their own reward. Start off within some BTC dominance here, which I guess I might be a hot shot in trying to say that I'm going to draw another line and already have for where I think this is going to go. It's probably going to go higher, Bitcoin dominance, which means I don't think the run it's quite over. It might only just be one more leg higher, but I think I know where this is going to go on that leg up. For after leaving this Fibonacci level, it pierced extra below, and for a while it even resisted it for a good amount of time, but never did get down below this level of support often tested at the 57 and third handle. And then since it broke out here on June the 14th, we had these 3 days going down to the 18 of highs and now lifting off. And it's like a pause day today at this previous high level. Of course, there's no guarantee it's going to go up to it. 67.39 represents a 161.8% level, or yeah, from this high to this low on the exponential side of things. It's already supported this level of resistance as well, something of note within it, but that's probably where I think that the market is going to head towards. Let's see what happens moving forward. Next up is BTC. And its pattern, I mean, these Fibonacci lines, it's just luck that they're hitting like this, I would suppose. But resistance here, no. Resistance here, yes. Support here, yes. And now it's at the 18 average of highs as it's doing its pause amongst such. It's most likely going to make. It's most likely going to be a break above 15,000 as its next leg higher. But I consider its next level of resistance a retest of a pierce above the 13. So between 13,000, 14,000. Yeah, 13 and 14 as its next key level, but it does look as if that's where it's heading towards. Of course, no guarantees on it. It's just probability odds is how I'm looking at this moving forward. And like I said down here in the 4 hours, we're looking at this now. That's got to get above the 18 average, even attempt to resume this trend. Well, it's done that. It got above it 2 days ago at this 20-hour session. It went sideways for many periods, another leg higher. And it's now on period number 5 of going sideways on this low volatility. And again, we can see this level of resistance in here as support. And the 18 average is getting close to it. But, I mean, this is where I don't nitpick on exact numbers. If this just lifts off this period and we don't touch it, then, I mean, that's close enough. And I would be expecting breaking this level of resistance to have quite a significant move, again, with the first level coming in at this previous high point. On the weekly term, just the run hasn't stopped. We've had this one decent red candle here. We've had a few pause ones here and there. The last one was, and this is why I don't like to look at this. Oh, it's such a bearish candle. Yeah, because it's one of those cattails or whatever you want to call it, a wick big line. Again, wherever we came from, I mentioned that before. Oh, it was basically a move from here to here because the general point of this, when you pretty much close at your open and you have a significant move, in this case to the upside, that you did this. But by knowing where we came from in here, we knew we did this. And then it pierced a little bit extra, so it did a bit more, and it's done this. Now that's basically what we're seeing, at least from here. And we continue to hold very nicely on the monthly chart, so things looking very, very progressive. As I mentioned, it was both bullish and bearish to resist between 5,200 and 7,200 area. It's not bearish to go up like this and then just stay holding this area, which so far, only 4 days into the month, is what it's done after having this breakout. I mean, just the fact that it went over, that's not bearish at all. I mean, the fact that it pierces above and whatever, that's normal, that's fine. But usually in a bearish scenario, if it's going to have a good move above the highs, it's going to retrace at least back to the lows fast, if not even below that quickly after that as well, or within that same period. Okay, let's next look at Litecoin Bitcoin cross, which is just hanging in there, not doing really too much as it's just staying within this 18, and that's very much a neutral situation, leaving the 18 average here above this low, below this high, below this high. A lot of neutrality. You can make an up case for, oh, we're well below some of these key lows, and yet we're well below this high, right in the middle of this range, so there's not much more in this to stay, and it's really going to come down to this time frame here and where I want to talk about things, which is the daily. A situation in which this level of previous support has acted as resistance. This level, of course, did have a key leg lower than this. The possibility of this is, first, are we going to have a failed breakdown? Or are we going to resist this fact? And that's what we've been seeing, is resistance amongst not only the previous area, but now, of course, the 18 average as well, which left it yesterday, but now just back into it still in the declining session. And a lot of this because of Bitcoin dominance. And that could continue on even further if Bitcoin does just that, as I mentioned on the outset, or the start of the video. We could very easily have a retest of this, and maybe even go down below the 90 handle. And not because it's losing value against the dollar. In fact, it's because it's losing value against what's kicking ass in Bitcoin. For when I look at, and I'll put the exact same market for Litecoin in, exact same time frame for the daily. Let me just put a few more periods like this and switch it up against the US dollar. And it doesn't look like this. It's been in a much solid up run. Now, right, as far as how it stands, currently, this is a battle where you have to tip your hat to the Litecoin bulls in the short run. They got a long ways to go. 18 average of lows is declining, 18 average of highs is declining, and let's just show you why. This is where it came back down to. Came back down to this level, was unable to come back down to this level of resistance. That's fine. It doesn't have to go deeper. That's a bullish thing right there. And then you have this quick little green candle up move after a bullish pause day. And I say bullish pause day because it had a decent size up move, closed near the highs, didn't go down much further. In fact, it's pretty much stayed at the open for its lows, didn't go much below it. So it was a productive but not a great day because it stayed below on that 28th. But this day got up to the 18 average of highs and was an 11.5% up day, only to give pretty much all back in the span of not much the first, but definitely give back the entire 2 day gains in the 2 days after that. Bearish signal. So as we look at the three that have posted, or the only three that we can look at since where we stand to right now, here we have it going down below the 18 average of lows, retesting this previous low. It did pierce above it, and then it paused it as it hung in there amongst the 18 average of lows. And the fact that it's having the move that it's having right now, I mean, it's not a great move because its volatility is, man, nothing great. Its situation has done nothing to decline it, but it's got within the band firmly. It's having its third higher low for the higher low for each of the last 2 days from before, so it's got a very short term uptrend. And when we look at this on shorter term time frames, then that's where we're going to see the evidence that, well, this thing gets pretty interesting. Because this was that failed nice breakout that it had. It was holding this as support, but didn't in here. Resisted it to break down to what we can see was pretty much a matching low to in here. And this was its last opportunity where any type of bearishness was in play, because as we can see here, sort of like how the daily is showing this sort of similar sort of deal, this is where it's supposed to break down, but we have a pause and up move. Okay, well, again, on a bearish level, what you're going to usually have happen after this is a move very quickly within the next 1 to 3 periods to the 18 average of lows, and if it hasn't already broken it within the next 1 to 4 periods after that, you're going to just see weakness on the 18 lows. You're going to see your breakdown, that sort of deal. But that's not what occurred. Rather, it had a pause, and then it supported the lows. It didn't show weakness at it. And the move right here, the 1600-hour timestamp on July the 3rd yesterday, was a nice productive one. It held it well. And then this was a big one here, right at midnight, which got up to this line. Now it's showing the signs of an attempt to get this thing back going. The last time it did it was here. That attempt, of course, failed. Oftentimes from failed moves, you get fast moves. Not really much of a fast move in here. So it's, again, it tried to attempt it. I've seen this happen before. you have a failed breakout, you have just a move that might go back to previous low, and then it re-has that move again. You see a 418 average doing stuff what it's doing. It's going to break some short-term established resistance, which happens to work out at this fib mark near the 126. We'll say 127 low change, and then getting above that point. Well, at this stage here, maybe you resist this bullishly, maybe you don't. And when I say resist it bullishly, meaning you stay there sideways for a few periods, 2, 5, 10, even 15, or then you go down to this area, find support, and come back later. Or maybe you come up to this and it just takes it out. And if that happens, we'd be talking about things like a double bottom, which is a two U's, two V's, and there's also other things you could make this look like on a creative level. But just, yeah, two U's, two V-shaped formations. But to do that, it's got to have a fast move up to this. Well, it doesn't have to be too fast, but a move to this level, and that's a bullish sign just to do that. And then it's got to get above the neckline to confirm. So overall, as we stand within this, it's just in this battle in here. 18 average of highs here is 132. It really needs to clearly get above 136, 137. And then at that stage, we can start talking about some probability odds for sick gains of, oh, hey guys, Litecoin, yeah, about 40%, 100% up in the next 10 to 50 hours. How do you like that thought? Yeah, right now I can't say that because it's just hanging in there within the 18. But if I see this holding and staying above in here, if I see this at 148 breaking out above, then I would be saying that. But until then, it's trying to revert the trend as the 18 is just starting to flip over. As of course the move here did bring resistance to the lows, which helps it decline it. But the last couple, the way it's been showing out, as I stated, that's not a bearish situation, I guess, until now. We've had a lot of support at 113. We've got the 18 average of highs, really around 136 is this little area. So 136 to like 110. And that $25, $26 range to me is extremely neutral sideways action. And the bottom end of the range and the top end is just the numbers that I've stated. All right, then. Let's take a look at Theta next. And against Bitcoin, it was back in near the end of the winter, Northern Hemisphere, over 5,000. That's what it was. Now it's barely under 1,000 in Satoshi level. Of course, before then, roughly after the third week of January, or at the end of the year, even through most of this, for a good firm period, it was 1,200. And then the November 30th date was just a wild situation, as it had a high of 36.95, a low of 12.35. Just nothing really to see here. But in order to get it, that happened between you had either had to have orders in, or it was between like 2 to 4 o'clock in the morning Eastern time when it all happened. But even when it came back, it meant that it was like, well, I can't remember exactly what the price was at 9 o'clock, 10 o'clock in the morning that day, but it was still well over 24, which meant that even though you couldn't have traded and profited nicely at 35, 34, you were still able to trade nicely at 24, which is what people did. Price comes back down, and oh, was this just a double fluke event, and is that just never going to happen again? And if something like that happens again, can it beat that? After all, this was about a 5x move. I have done some statistics using the daily term time frame on Crypto Compare's website. I can download data, and I got data going back to January 30th, 2018. So even before this, on a day-to-day level. And I'm looking at statistics within the pairings of Theta, Litecoin, and Bitcoin, and how they cross with each other in combination. Because I've shown Theta versus Bitcoin. I've shown Litecoin against Bitcoin. And let's get some statistics on those two. But let's get some statistics on the Litecoin versus Theta cross as well. And the first one we're going to look at is Theta and Bitcoin. So the average price move, which means the better of the two. When one goes up on the market, the other goes down. If something's up 10%, the other market's down 9.09%, which means If you see something, oh, this market's down 5%. Well, the other one's up. So if you're ratio trading, something's up, the other's down. It's just how it is. So every single day, what I've got on here is this is what the move was: highest price minus lowest price divided by lowest price, which is the gainer for the best move. And the average on the Theta Bitcoin cross is 5%, and the median was 3.06. And when you have a differential and trying to understand how those numbers work, the median price means, well, there's like 520 days. So if I were to rank all of them, the 260th or so ranked a day would be 3.06%. But there's a lot of these big days in here with like 20% and 19 and 14. And they skew up the average in here. One of the biggest ones in the real world is the average and median salaries, where because of the major high price salaries out there, that the average is so much higher than where the median is. The number of days in which it had a 5% gain, 170. And this is this, and for percentage wise, that would be like 30 plus percent of the time that it either has an up or down day of that level. 10% days, 58. That's almost 10% of the time. 15% days at 12 or at 24 rather, down and so on. Now, what this means is when you start off with day one, you set the price and you're looking for the market to go up or down on the equivalency of 6%. So, which since a move hits in either direction, of course, 6% up is a little different than down, but using that same measure for each coin, 158 times there would have been a trade. Now this number would be higher in the real sense because if you're looking for 6% moves, I need better. I need more data than just one per day. I almost need hourly data, and then this would be better. But as far as these larger moves, and then this is what your average play would be. So even if I'm looking for 6% moves, my average return was 12%. Because if, say, for example, the ratio of something was 100 to 1, then it goes to 107. Well, that's a 7% move, and that's good enough for a trade. But maybe the next day it's 148 from 100, and that's a 48% move. And that's going to happen along the way. So you're going to get better than 6% moves if you're looking for 6% hits. You're on average, you're going to be getting 12. And then you can see the numbers going down where 5 times, if you're just looking for the price to double, they go from 2 to 4, 4 to 8, 8 to 4, all that type of stuff. It would have done it 5 times against Bitcoin already from the onset of the situation. Now, if you look at some other crosses, say Litecoin and Bitcoin, wow, the volatility is much lower. See, Theta is a very volatile coin. It's not going to be the winner of all the 100, 200, whatever coins you want to bring out there. But it's going to be definitely a noteworthy one, or definitely going to be up there. It's, I think, at the top 10, 12% core. With that being said, Litecoin, Bitcoin, its average price move in median is 2 1/3 and 1 2/3. Compare that to this, yeah, a little bit of a difference. And then we can see here 56,742 nil the rest of the way. 56,742 nil. Well, Theta BTC is a lot more volatile. And this is from January 30 on. Within this in here, the amount of times in which it did its move is in here. 80 times. And you can ignore this. This was just me doing calculations at different times for something. 8.6% average for 80 times 6. So you see in here 158. And it gets 30 and 30. There's 30 times at 30%. Well, here at 30%, there is 12. Now, how it goes from 17, 10, and 12 like this, I'm trying to wow, I didn't look much to in it, but that's what the data stats automatically come in as. So those numbers are as they are. Now, if I look at the combination of both Theta and Litecoin, it's not too much different. It does show to me in the shorter term it's actually a lot more profitable, it looks like. But as far as midterm analysis, it really hasn't done any better. When I look at things like, for example, first we're going to look at this 506 and 329, 5 and 306, pretty much the same. Here we got 170.58.24, 176.61.27. And these are pretty much all the same the rest of the way down in here as well. But it looks to me as if there would be more of these types of moves in here. Same thing in here when I look at this volatility. 167, 117, and 96. Okay. 158, 118, 86. A bit more on these little smaller numbers. Again, I think if you had hourly data, it would be doing a lot better. But I would rather, if I'm definitely going to be holding those two at an aggressive level, I can trade them back and forth at an aggressive trading strategy platform. And in such, get as much of these swings as we can. 6 times on this cross, it has had 100% volatility. And even if you're looking for like 30% moves, there's been 24 of them since the onset of this coin a year and a half ago, less a month almost. There will be a year and a half at the end of the month. And then if you're doing the short-term trading, you're going to get whatever you could pick away at. You could do a lot of things to make these numbers good short term. One, you can beat this number of 167 in that time, or just get more than what an automated daily number price I can get here would do. And even when you look at a situation where, okay, it's time to sell one coin for another, you can try to be picky as best you can to try to sell for the highest price and buy for the lowest price possible. And if you're seeing you're trading at a ratio that might give you, say, a 10% push, you could try to make it up 11, 12, 13. The more often you do that, the better your results are going to be. And oftentimes, you're going to notice it just always ends up working. If you do things like, not always, of course, but say I'm going to sell one coin, and then now I'm going to try to buy the other one back, but I'm going to put a buy order in for a few percentage points lower. And then oftentimes within the hour or the day, it's going to work. And then if not, within the week, sometimes it just gets filled as it is anyway. And if not, not that as long as you don't have too many coins that get quote unquote mismanaged or thrown into the Bitcoin pool because of a situation like that, you can get better on your trade returns. And thus, whenever you have these sideways moving markets, you'll get small returns. Nothing too fantastic, but better than nothing. And they also parlay into some superior gains. Because what are you going to do in a spot where, say, if Theta does what it did on November 30th again, and maybe it does it even better? What are you going to do if it does what it did in 2019 in the winter, and have several days and weeks and even a couple months, a few months where it has spectacular gains? I Having a strategy to just the risk reward idea of, okay, if keyword is if, just like in computer programming, if the if never happens, it never goes through, but you're ready for it if it does. If something like this big happens, and it happens for a fast large move, then let's just assume the other coin only does something like this. You're oftentimes trading at 7% or 20% ratio trade. But you got a day or a situation where it's like maybe 165%. Do you want to sell all your Theta and buy Litecoin? That's a very aggressive gamble, but how often is that going to work? Where when you get to this point, either Litecoin will have its move next, or Theta will just pull back, and it's almost like trying to say it here, or even gambling here. Oh yeah, I want to sell all my Theta and buy back, and then it worked out, but it took some time. Of course, it didn't take too much time if you did it up here, but the whole point is that say you did sell here, and it goes up to say here, or even furthermore here, and then it comes back down like that, whatever. But oftentimes, again, this will come back and, oh, I sold all my Theta. Next thing you know, I'm able to buy it back, and there's like a 35, 40%, 50% profit move. So I can say I sold, for every 100 that I sold, I can buy 140 back, 130 back, and still have or buy it for less Litecoin than I received. All that type of idea. But even again, selling 50% or 30%, 60%, 70%. That's to me where that gets realistic, because I'm not kidding when I say everything, because it's an interesting high risk, high reward gamble with what I'd be interested to see which the better play is, because I remember if you watch my videos back in here, I talked about how, oh, I really thought about here at the 3600 level as it was coming up on February the 28th, 27 time frame, about selling every bit of my Theta. And I didn't have as much compared to now, and I still had an okay amount though. And I thought, you know what, let's just sell everything, every little bit of it. And of course, I would have been able to buy a little bit back here, which meant I might have a little bit of a sale here, but everything here would have been buybacks. And it would have worked out to be more profitable. Would have, could have, and should have. But when you look at the woulda, coulda, and should haves, what's the probability odds in your favor or against you? Because I've heard people talk about when markets are way up about the thing about not selling is, oh, but what happens if it goes way higher? You're not gonna profit as much. And what happens if it doesn't, and then it goes back down, and I end up successfully getting a sell high, buy low, and so on and so forth. But the mathematics upon, say again, having a move where if there's 150% gain on the ratio, I could take something like 50, 60% of what I own on Theta. Have a sick ratio trade basically, because the amount of the of subsequent coins on the other flip side, and in this case we'll say Litecoin, would be a very good amount. But as far as what I would own on Theta, we'll assume that this goes close to 3,000 because of that type of gain. Well, now what happens if it goes up here? Well, if I sold half of what I owned on a price point that went from 1,000 to 3,000, that means they would be worth 50% more, what I'm holding back from before where it was. Because if they were worth one Bitcoin unit or whatever, just one unit just to make the math easy, then they were worth three, and I sold half of that, that means they would be worth one and a half after that. So I would be up 50% and have a half more. So I got this of a ammunition of a balance to work with up here, that I could have a nice move continue. Oh, it goes up here, let's sell a third of it. Now I'm worth, well, I would take one unit and it would be worth more. So but that just gives me a good ratio trade again and keeps my ammunition really high. I get the aggressive trade by selling half of what I get, if of course a situation like that comes into play. And I don't need to be able to have to predict when it's going to happen. It's not like I have to state back in here, okay, Derek, do you think it's going to go up or down? I'm like, oh my goodness, how tough to call. Oh, it's down, I would predict. Okay. Yeah, yeah, definitely down now. I told you it was going down. Oh, you lose. You didn't profit because you bet it went down. No. I'm just gonna, if I see it's happening, and on a spot like that, before I just had orders ready to go. I know exactly what I would have done today. And I want to get this data in here just because I think I can get it. I'm gonna try to get the hourly data if I can get it. Please, please let me get it. So what I'm going to do is I'm just going to scroll it back, go like this. I The 4 hour still should give it to me, but we're not too far back from November 30th now. Maybe, yep, here we are. This worked. Got it. So what would have happened today, knowing that I live in the Toronto area? Okay, like nothing's going on here. You're just checking. Here you're at you would have seen earlier it was 1271, then it's 1305. It's like, man, it's went up by 2.5%. Getting above the 18, so attempting to do a reversal. Um, an outside period, but a little bit of action could pick up. But there's that little bit of a down move, and now we're breaking down below it. Okay, that was a failed move, resisting the 18, and this would have happened. What time would that happen? At midnight. Well, that's either I would have been up for it or not, because how likely it is that you go to bed here, and that's how you see it. Next thing you know, as we can see, this is 3 o'clock in the morning, and it's 3600. At the start of the hour, it was 1400. It managed to have its first trade, and this is an interesting thing. because the first buyer after this period bought pretty good, most likely, unless the first person before sold down really big, either or. Because the next bid or price that came in after it is the open. And if the close was 29.42 and the open was 31.84, that means the person would have bought it up 200 basis points in one shot. And then it closed it at 24. So waking up at like say 8 o'clock, 9 o'clock in the morning would have meant getting 2100. Now that's probably what you would have got. Now, in a situation, if I'm up, let's just assume I happen to be, it would have worked out either I fall asleep before I miss it, or let's just assume I'm up at, and a lot of times I can be up at like 12:30 in the morning, 12:40. Okay, this is on my watch list now. Okay, this thing has just went serious because it would have went up like 20 or so percent. I would have made a few small ratio trades as it was already. And then after one period, I would have been like, okay, pause, pause. I would have still seen volatility. Most likely, I still would have been up, and this would have, I probably would have been up for it. And it would have been fun because what happens is all the ratio trades you make in here, next thing you know, you see, oh, we're at like 2200. It was 33, 50% down. And well, the last trade, I sold 100 of these and I got 20 of this whatever else other coin. Now I'm going to take 17 or 16 of those other coins that I bought 20 of and pick up maybe 130, 140 or 30% more. And it's like, wow, what a flip. I got a few free coins of both of them. And you try to get it. Now, what this didn't have at the time was any major pushes afterwards because the only real uh, dead cat, well, what do you call those? Bear, just those failed moves after a big one. I don't know what there's a name for it. But those only rallies were from 1959 to 24. That was still like close to 20%. And then in here, this was at like late evening, and I would have taken part of some of this. I can remember a little bit of it. But going 1900 up to 23, again about 20%. But that's all there was. You can see the intraday movements just mad out. And it just meant just grinding your buy orders back in more than anything else. And having, okay, moves coming back in, 1579 to 19, and just going through your normal, really good volatility that Theta is going to present because if we just randomly go through this and you're like, okay, let's just wait to sell when it goes up and buy when it goes down. Okay, there you go. Were you available at 2 o'clock to sell here? Did you have an opportunity later? No. But you got your buybacks if you did sell. And then market's not doing much in here. The short-term move, you could have done something in here if this, but oftentimes not if you're, of course, not playing it. But what's the volatility here? 1250 to 1290. That's like 40 basis points, 3%. You can see how that could not be anything for a lot of people. But then you're going to have your pickup times. Here we go from 1300 down to 1230. That's like slowdown periods. And then a nice move happens here, but it's you have to been fast here. 9 o'clock in the morning, you either have your orders in or you were up for it. If you weren't up for it, only price pays, and it got up to 1348. If you were able to get up past these numbers, you got it, but there was no getting it afterwards, at least not anytime soon. And it meant having nothing but buy orders fill until this goes up. And if all you're looking to do is buy when it goes nicely below the lows and sell when it goes nicely above the highs, well, here it goes nicely below it. Definitely here it goes nicely below it. That most certainly goes nicely above it, even at 1232, let alone again at 1286. And oh, this happened, stuff like this. Just out of the blue here, 8 p.m. Eastern Time, December the 21st, first day of winter, 4 days until Christmas. And you get a move like this. Now, this is a serious move, and if you're ratio trading things, what it means is obviously, especially if you're checking a few times a day or you're doing it full time, you know that the price has been settled in the 1240, 1250, 1260 range. So when this happens here, next thing you know, you're talking about price action going up to like 1600 or 350 basis points. Now you're talking the realm of going over 30%. So all these ratios that if you're looking for 7-10% moves and you want to get what the market gives you, well, this is where the market gave you up to 30% immediately anyway. You had to been fast forward, you would have had to been on the computer at 8 p.m. Eastern Time hour. But you seen from up until the end of this 3 in the morning, you had hours. You had 7 hours of getting between 1500 and 1600 low change. You had a symmetrical triangle, higher lows, or excuse, yeah, higher lows, lower highs, and of course it broke it to the downside. And then there's some of your buybacks. That's just, and all of your buybacks really. That's just how the market works. And again, a move like this happens. When did this happen? This happened December 27th. At 1200, it goes up to 1500. A little better than 300 basis points. So we're talking a bit better than 25% to a maximum level. And in here, you had until the end of the night, up until midnight, to trade between like high 1300s and low 1400s. And then you had another opportunity the next night at 9 p.m. But even here, you had some chances to buy at like 1260, sell at 1400. So any of these little moves you can pick away at. And the way I look at the whole part of ratio trading, doing things like adding like I've been asked about like the Litecoin and Ethereum cross. And as much as I think that's a very good, smart, conservative, low volatile, keyword low volatile trade, if you put two low volatile coins together, they're going to be low volatile on the ratio. But if you put a low volatile one with a high volatile one, then the ratio will be high volatile one because there's no other way. So Theta against Litecoin to me just seems to be a no-brainer play. But within this, if stuff like this happens for me, this would make me a busy beaver. Although technically I'm not a beaver, and my monkey brain, although technically it's a human brain, would have to realize that if things like this happen and when they happen, well, what's the rest of the other markets doing? Usually they're just going to be doing its thing, and then Theta's its thing at that moment would be something like this. I would go to here, and right now I'm looking. Right now I'm looking at Litecoin DGB and Litecoin TFU. I'm looking for over 10% on both of them right now. I've already sold a bit of Litecoin already, so I want to get better moves if they're going to happen. With that being said, these little moves here. Say this is how it looks before the event happens. Well, if there's a 30% move, all of the ones that have the theta on here are going to have these big numbers, so I'm going to have to, I would say to myself and write down, okay, how many theta do I need to sell for ARC? How many do I want to sell for Dash? How many do I want to sell for ETC? How many do I want to sell for my Litecoin? How many do I want to sell for Qtum? How many do I want to sell for the Gold Chain and Waves and Ripple? And then I calculate it. I'll add them together. I'll send them from my wallet. It doesn't take long. And then one by one, I would handle each coin. And that's going to take 10 minutes or so to trade it. So usually after the 10 minutes, sometimes I'll get a better Litecoin price, the same or worse, because maybe the price goes up to like 1600. 3 minutes later, as I'm working on my third or fourth ratio trade, maybe they're at like 18, or it goes from 16 to 1680 even, or 1720, or it goes from 1600 to 1550, and they're still worth trading because of the moves of those nature. But that really what it comes down to, which is why if you're just trying to do a simple thing, to me this is the number one ratio. I think is the Litecoin Theta one, and most certainly there's bigger numbers being played with this compared to stuff like Waves and Theta, most certainly so. And Arc and Theta is the most smallest one on here for value. So one way of putting it, if I'm trading with Waves or Arc, you're going to talk about just for one regular trade, like not a 40% move, but a 9% move or something. We're talking about a few hundred Theta will get bought or sold. Yet with Litecoin, we're going to be talking 4 digits Theta will be bought or sold because, and over one Litecoin maybe for a sale. I'm going to look to sell one Litecoin for 1,000 Theta or whatever, 800 Theta. 1.5 Litecoin at a time. Those bigger numbers because, and that's just again for a small trade. Again, if I'm just trading Litecoin and Theta on a spot where Theta goes up like big, like a 50-80% move, then the amount of Litecoin that would be traded would be multiples. And I could, a lot of times I'm like, okay, in a trade I might gain zero point 0.3 Litecoin. Okay, well that's not bad. It's like maybe like $45 or something for one play. Okay, that's fine. But there's going to be situations where I'm going to gain multiple Litecoins on just one flip. because if market conditions allocate it for me, then it's going to happen. What I'm cheering for, and if it happens, it happens. That's great. If it doesn't, I always adjust to what happens anyway. Is once Bitcoin's done its dominance, then I want to see Litecoin have its dominance lasting 1 to 4 days, where it goes up big, where the rest of the market does its thing. And then after that, Litecoin will cool off, go sideways or down a bit, and the rest of the market's going to pump up big. That's what I hope happens. That's what happened at least with Litecoin in December of 2017, as just around like the 7th, 8th, 9th, 10th or so. Litecoin had a huge like 3 day pump, and then it stopped going up, and everything else went up for like 5 weeks, or depending on its situation. It was around, on average, everything went up to like January 15 or so, from like December 15. All right. Thank you for tuning in to this video. And wow, 40 minutes. Have yourself a great day. Bye bye.